Amikta Batra, and with me is Sonia Shenoy as well as Mangalam Malu. Well, it seems as though we are definitely celebrating the festive season for the markets. Just look at the rally that we have on our hands at this point in time. Courtesy what has taken place in the US, the data from the US indicated that maybe that, the tightening from the Fed might not be as aggressive going forward simply because a few chinks are showing in the economic data. That's the hope at this point in time. But for us, we're taking this rally with both hands, not to mention that we had an FII net buy figure which came through as well.
After so long, right? After 6-7 days of selling, finally buying from FIs. But the reasons may be plenty. All I can say is that this is a really volatile market. I mean, 2 down days, 1 up day. We're just chiming to the tune of what the global markets are throwing up. But at least the 200-day moving average, which is 16,970, is holding for now. So the bulls would like that. And it's fitting on a day just ahead of Dussehra when all of us are celebrating in our traditional finery. The market is also doing a bit of a jig.
The market is doing a jig. And you know what? I take your point on the volatility in the market, etc. and the FIs buying. But what they also did was they were shorting lock, stock and barrel in index futures. And what today's rally does is that it's sustaining at higher levels. So those shorts may probably have to cover their positions. And tomorrow is a holiday. So to that extent, the second half of trade will be extremely crucial, whether those shorts cover their positions or whether these longs take home some of the money ahead of the holiday. But all of that and more in the next 1 hour or so, and also the second half of trade. First up, we do have the management of KEC International with us. They've won orders worth nearly 1,400 crores. The company's order intake this year now stands at 8,400 crore, which is a 50% increase year on year. Vimal Kejriwal, the MD and CEO of the company, now joins us on the show. Thanks a lot, Mr. Kejriwal, for joining in. It's a 50% jump that you've seen in order intake for the first half of this year, so to say. What's your outlook for the intake, the overall order inflow for this year? And with these orders, what does your order book stand at?
So good afternoon, Mangalam. I think with these orders, our order book is just about 25,000 crores and we have L1s of around 7,000. So overall, we are at around 30,000, 32,000 crores. And as far as the year target is there, we have been looking at between 18 to 20,000, hopefully to touch 20,000 crores order intake for the year.
Okay, can you just repeat your target with regards to the order intake, Mr. Kejriwal?
Yeah, our target is around between 18 to 20,000 crores.
18 to 20,000 crores. Can you break it up for us in terms of which segments and which geographies are you expecting that incremental order book to come through from?
So broadly, the transmission, the T&D sector should contribute around 40% of the order intake, sorry. And the balance would be, I'll say, I don't know the exact number, but another 40% would be civil and then railways. I'll say broadly, that's the business-wise breakup. And geographically, if you look at it, it will be around 30% coming in, or maybe 25% coming in from the international market, which is primarily T&D, and the rest would be India.
Okay, Mr. Kejriwal, good afternoon. So this is your second railway order, right, in this TCAS segment. And I understand that in all of FY22, the railway business was pretty flat. Now, do you see it coming back in a big way and any more order visibility over there?
So, Sonia, both FY22 and FY21, railway business has been slack. Yeah. But of late, suddenly we are seeing a large number of orders coming out, tenders coming out in railways across all the spheres, whether it is speed upgradation, whether it is new lines, whether it's gauge conversion. So we are actually presently surprised. In fact, our railway order intake this year has been almost close to 2,000 crores, which is almost equivalent to what we did last year or the year before.
Makes sense. So, now that you have 32,000 crore worth orders, you had guided for a 20% revenue growth in FY23. Margins you were a little, shaky to comment upon. Now we're closer to the halfway mark of this year. What are your thoughts? Would you want to revise your revenue targets for this year and probably give us a margin guidance?
So, Mangalam, we had our guidance has been around 15%, okay, and not at 20. But I think we should be doing better than that, the way things are happening and the way orders are coming in. And also, the revenue should be aided by the fall in the commodity prices, okay? So I think that should also push a lot of execution. Hopefully, we'll do definitely better. Q1 we had 31%. We'll keep our fingers crossed saying how much more we can do, but we'll definitely exceed 15%.
And the margins?
Margins are still under a cloud in the sense that we have got a lot of committed costs. So as I said earlier also, I think from Q3 onwards, we'll start seeing the margins bumping up, and Q3 and Q4 should be reasonably good. And from FY24 is the time when we have been saying that our margins should be back to, close to our double-digit margins.
Okay. Can you give us a sense in terms of how the international business is doing? For example, your operations in Brazil. Give us a sense, because now commodity prices are pulling back a little bit. There's an expectation of a recession we could probably see globally. So what is business like on the international front?
So international, in fact, if you look at today's orders, all the orders in the transmission are from the MENA region. And after a long, long time, there has been an interconnection between different countries. This is between Saudi and Kuwait. So clearly the oil revenue is at play somewhere. The second area where we are seeing a lot of demand is on the United States itself. I think after all the disasters which they have faced, they are really getting into rebuilding their infrastructure. In fact, our Mexico plant, so running at 40-50% for the last few years, is now booked for maybe next 6 quarters, all supplies to United States. The area where we are not seeing much happening is Africa. Unfortunately, that's a market which we had thought will did well for the last few years, but I think this year, maybe because of the financings being diverted towards COVID and other places, we are seeing a slack in that market. Europe, we are not there, so I think the recession is more about Europe. I think fortunately we are not there. So as of now, we are actually seeing that this year, particularly, our international business will grow by almost 30 to 40% in terms of revenue.
Okay. I remember pre-COVID, it was a matter of privilege and pride, right, to be exposed to markets like Europe, North America, and now how tables have turned. I mean, people are glad that they're not part of those economies because of the challenges there, especially Europe, I'm talking about. Just coming back to that point you were making about railways, you said that you're surprised to see such a surge in the order book, and so far you have about 2,000 crores of orders. The order visibility, the number that I have for the next 7 to 8 quarters purely from railways is 7,000 crores. Do you see more than that? Would you want to update that number? And also, as a part of your overall business, railways is currently 16%. Do you see the contribution rise?
So railways will definitely rise. This year itself, we do expect them that will be at least, I'll say, around 20 to 25% of our revenues would come from the railways. And the other piece is that, earlier we were not seeing so much of doubling and tripling of lines. Somehow suddenly we are finding a lot of projects coming up on that. And also on the piece of where the railways want to increase the speed. Mission Raftar is one place where we are seeing a lot of orders coming in. In fact, last time when we had announced an order, you will be surprised, the order was basically to ensure that wild animals and elephants can pass a track. So we had got an order of almost 500 crores to raise the level of the line so that we are building under bridges and other things for animals to pass. So there's a lot of things which are coming out in the railways, which are a surprise. The other piece in the railways is that we have also started bidding for international railway orders, and we are delivering a couple of them. So I do expect that some part of our railway revenues will start coming in from the international market also. And that will add to the percentage of railway revenue in our total numbers.
Right. The other growth path for the company was the one that you would see in your civil business as well. So if you could give us a sense of how much the civil business would be this year and the next year. And secondly, I remember us speaking at the start of this year, you said that by Q2, Q3, you would get some orders from Green Corridor as well, the Green Energy Corridor. Has that happened? So both on civil and the Green Energy Corridor?
So what has happened is that the Rajasthan piece is still not clear. The cases are still in Supreme Court. So tenders in that region are getting postponed, but some of our orders which were on hold have been released. So revenue has started accruing on some of the earlier orders, let me put it this way. In Gujarat, we have got a few orders. Last time we had announced orders in Gujarat. So they are all power grid orders. And they are ultimately connecting to the Green Energy Corridor. Okay, so work has started on those orders. There are more in the area of Navsari and all that. There are 3 or 4 orders which you have received there.
Okay, just a quick question, Mr. Kejriwal, from my end. You did have issues with regards to Afghanistan. You did have some outstanding payments. Where do things stand? Have things eased out? Have you started receiving payments, or is that a bad debt now?
So, no, it is not bad debt. We have not yet received the payments, but you have to understand that all these payments are from multilaterals like World Bank, ADB, and USAID, and at least one of them is also in short with ECGC. So we are in continuous dialogue with them, and they are also very keen to restart the project or make the payment. So we have been having discussions. Maybe hopefully in quarter 3 we should at least receive part of the payment. We are very confident that not even $1 would be abandoned there. No.
Okay, Mr. Kejriwal, we leave it at that. Thanks a lot for joining in. All the best. That's KC International, very upbeat as far as the new order wins are concerned. The order intake has gone up about 50%, and they say that 20 to 25% of the revenues will now come from the railway sector compared to 16% earlier. So the contribution will go up from there. Let's slip into a quick break, but there's lots happening in the world of FMCG with so many companies giving out their business updates. Abneesh Roy of Edelweiss Securities will join in to discuss the demand trends there and decode what Q2 would look like for names like Avenue Supermarts and Marico. Stay tuned.
Welcome back. Let's focus on the consumer space now. The second quarter business updates are coming in. We've got two of them. Avenue Supermarts posted a positive business update. On the back of that, the stock is doing well. Marico, however, is a rare loser today on account of the company recording a low single-digit volume growth with margins being the same as they were the same time last year. Abneesh Roy, who's the Executive Director, Institutional Equities at Edelweiss, joins us now. Abneesh, of course, has been tracking the FMCG space very closely. Abneesh, what do these numbers indicate for the entire FMCG space? All hopes were pinned on recovery in the second half, but we do have the second quarter to, attend.
Yeah, thanks, Malu. Yes, definitely versus Q1, Q2 will be slightly tougher quarter on YOY basis. If you remember Q1, the base was a bit soft because of COVID, and also a lot of the summer categories saw very high growth because of very harsh summer. None of these two factors are there. So we will see companies definitely see rural volumes under pressure. Most of the companies will see urban growth being faster. If you see DMart results and Marico results, that is coming out very clearly. We saw DMart's revenues up 36% YOY, 6% QOQ, while on the other hand, Marico, which does have exposure to the rural segment, we cannot compare both companies like to like, but definitely rural is a challenge currently. Hopefully, H2 worst will be behind because of soft base and because monsoon has been good in 60% of the country, and also the farm prices are up. But companies like Asian Paints, for example, the margin will be quite soft on YOY basis. So Asian Paint will see good numbers, both on the volume front, price hike, margins will see a good recovery on YOY basis. So yes, this quarter, if you see the raw material correction, which we have seen, will not be really visible for most companies because higher price inventory will be there. The rupee depreciation is definitely going to impact. And some of the raw material for HUL, for example, in terms of caustic soda, borax, etc., have been inflationary. So H2 is where we are expecting recovery both in the volumes and on the margin. So tough quarter Q2 for most companies.
Okay, just to follow up then on DMart, you said that of course it's looking good this time around, but the stock has also rallied, right? I mean, from the low that we saw in May of 3,200, the stock is back at 4,500 now, which is a 40% growth. Do you think the best is in the price?
No, we remain positive on the long-term potential. If you see this quarter also, 8 stores have been added. I think investors in DMart look essentially at two things. One is how the store expansion is. Last 3 quarters, that has been strong. So we definitely see 40 to 50 stores addition being possible. And second is if you see clearly rural currently is under stress. So most of the retailers are obviously in the urban areas. That's the second point. Third, of course, also because startup capital is definitely drying up, all this competitive intensity from the e-commerce, also the quick e-commerce, those will clearly, intensity will reduce. So that's also something which is clearly there in the minds of customer. So essentially, investors are flocking towards India. Investors are flocking towards more defensive names where the concern on the interest rate hikes, etc., are not there. Predictability or demand is there. So Avenue Supermart will be a play on those also, but from medium long-term perspective. Yeah.
It's interesting that you say that you think the intensity of e-commerce is probably going to reduce. That is probably also a read-through for the pharmacy sector. But Abneesh, I wanted your thoughts. You said that you expect a volume recovery in the second half. That's probably when we'll, see a downside towards inflation after the RBI rate hikes actually come into effect totally. What is your assumption for volumes then for the second half, and cumulatively, where do you think volumes would be for the entire fiscal?
Sure. So definitely we'll have a range of the volumes. For example, Asian Paints, even for this quarter, we expect double-digit volume growth, and for the full year also. If I see staples, some of the companies will have negative volumes in India. So someone like a Imami, someone like say Tata Consumer, say in the India part of the business, will have a negative volumes because of the rural stress. HUL, if I see, clearly did quite well in Q1 in terms of 6% volume growth. In Q2, of course, the soft base will not be available. My sense is HUL should see 2 to 3% volume growth in Q2. This should accelerate in H2 because of the base being favorable in terms of rural, because the slowdown happened last year. And of course, what will happen is, because of the raw material deflation, we will see in soaps, for example, promotions coming back. That will also help the volume growth. So yes, I do expect that for the full year, maybe we should expect H2 being 2 to 3% higher volume for most of the companies. But definitely we'll be betting on companies which are diversified, where raw material correction is starting. Two categories already seeing recovery in terms of demand are biscuits and noodles. So that's why we like Nestle and Britannia. Those are definitely a play. And H2 will see more recovery happening there.
Right, biscuits and noodles doing well right now. We're all munching on them for sure.
Like biscuits and noodles, I can assure you that. Whether or not we like Nestle and Britannia.
I know, biscuits for sure. Abneesh, I take your point on promotions coming back, ad spends coming back, and this is something that we touched upon the last time as well, where maybe the benefit of lower raw material prices will be invested back in volume growth via promotions and brand growth via ad spends, etc., and whether that comes into margins or not. But be that as it may, it is also the Q2 update season before the result season. In the next couple of days, we'll get updates from Titan, Godrej Consumer, and Dabur as well. What are your thoughts on that? Which one would you pick?
I think clearly urban focused demand companies will do better. So I would expect Titan to do better, especially if you see, because festive season is early this time. September month has been very good for discretionary part of the consumption. So I would say out of those three companies, Titan should do better. Out of Dabur and Godrej, my sense is Dabur should do better. Because in Dabur, if you remember previous quarter, the immunity was a issue in the base that is now resolved, and that was impacting both in terms of the mix and overall growth also. So I would say yes, Titan should do better, and Dabur should do better than GCPL, because GCPL issues on Indonesia continue to be there, and HI continues to be impacted because of very high rainfall in 60% and 40% at deficit also. So that remains impacted because of the season.
Okay. All right, Abneesh, we're going to leave it on that note. Thanks very much for joining in and speaking with us and discussing the entire FMCG space with us. Well, let's focus on some macros then. There was, in fact, a welcome relief when it came to India's trade deficit for the month of September. It came in at $26.7 billion, over $1 billion below the August levels. What does this mean? Is it sustainable? Lata's here with more. Lata.
Well, definitely good news, at least pressure of the rupee if the trade deficit is lower by $1 billion. Imports, the one that really bites, that was almost 62 billion in the month of August, and that's come down to around 56.5 billion thereabouts for the month of September. So that's a decent 4 billion fall, even more, 5 billion. The problem is that it also hurts exports, because export destinations are also going through a slowdown, and therefore exports are also a full 1 billion less than what it was last month. Going back to imports, the biggest relief has come from crude imports. They are about a good 2 billion lower, and that's primarily because the price of crude has fallen. Now, where this hurts, it is off highs. And I want to concentrate on that. Imports in June were as high as 63 billion. So now our 56 billion looks like a very good relief. And the problem is exports. Exports were as high as 38 billion in the month of June. And now look, we are down to 32. Look at the number of people who would have lost business. And trade deficit as well, of course, that is the relief. It was as bad as 31 billion in the month of July. And now we are at a good 26 billion, so relief for the currency.
Okay, good news over good news. The market's doing well and trade deficit has fallen. Thanks a lot, Lata, for that. Well, let's slip into a quick break. Market's still holding firm with the Bank Nifty seeing over 1,000 points of gains. On the other side, Ruchit Jain of 5paisa.com will be joining in with some trading strategies. Stay tuned. Welcome back, folks. In case you missed out, the market is in fine fettle this afternoon. The Nifty is up over 350 points. While we were busy discussing Maggi and biscuits, the market has climbed up further. So just take a look at some of the names. Angel One, of course, has been the star of the show in the broader markets post good set of numbers. Kalyan Jewelers, Chola Investment, Page Industries, all the consumption favorites are doing pretty well.
You were talking about Maggi and biscuits. Pizza said, hey, hear me out as well, because the intraday chart of Jubilant Foodworks comes up for you. Most of the gains happen just when we were discussing Maggi and biscuits. So that's telling you, that's Page Industries. No, that's the other way. Jubilant Foodworks. There you have it.
You want to throw Zomato into the entire mix? That's up 3.5%. Yesterday I was checking Lemon Tree, a lot of the hotel companies, all of them had fresh 52.
So here's the fact. I will get Maggi and biscuits for you guys. You order the pizza on your Zomato. How does that work?
You know, by the way, talking about Maggi, I just recently saw this viral video. I'm sure you've seen all the food experiments with Maggi. The latest was someone took Maggi and put a raspberry dolly ice cream into it and mixed it up, and that video went viral. So, you know,
it's
people
awful.
have ideas.
People are doing it only to get viral. I don't think the person who made it would have eaten
it.
Well, anyway, now there's real news which is flashing on the screen, which is Suven Pharma. They have received an establishment inspection report for one of their wholly owned subsidiaries, US FT inspection, which took place. It took place in July. Remember, this was a recent acquisition by Suven Pharma of Casper Pharma, and this particular inspection was actually quite closely tracked. Now they've received an EIR. We don't know what the establishment inspection report entails, because it should probably entail a VAI or an OAI, and that would be indicative of the status of the plant. But we're assuming that it could probably have been cleared by the US FDA. As of now, good news. It seems as though it should be positive news for Suven Pharma.
Okay, well, let's get talking about the market then. We have Ruchit Jain of 5paisa.com who joins in on the show. Ruchit, welcome to the show, and festive greetings to you ahead of Dussehra. Tell us about the individual stocks, because it looks like, a good problem to have for the traders, a problem of plenty. On the long side, what are you picking for the rest of the day?
Yeah, very good afternoon. Plenty of blessings and plenty of happy Dussehra to your team as well. Well, yes, amid some good talks on Jubilant Food and all that mouth-watering foods, I'm sorry to say, but I have some medicine stock for recommendation. So Cipla is one of the stock pick which we are recommending to our clients as well, because primarily if you look at the stock, then the pharmaceutical space especially has given a good breakout from a broad consolidation, in which Cipla is trading around its new all-time highs, and on the monthly chart, the last month's close were quite positive. So I think the rally is likely to continue going ahead. So Cipla can be bought at current levels from a short-term trading perspective for a potential targets around 1200 with a stop loss below 1110. And one of the mid-cap name, actually, there have been some of the mid-cap stocks which in this last couple of months volatility have stood out quite well. They have shown a relative outperformance and have not shown any price-wise correction. So one of them is Kirloskar Ferrous Industries. If you look at the broader charts, almost 1.5 years of consolidation was there in this Kirloskar Ferrous stock, and the price have recently given a breakout from that consolidation. And if you look at the volumes pattern, the price up move recently have been accompanied by very good volumes. The volumes are rising, so which is a good sign. And we believe that in short to medium term, the outperformance is likely to continue. So Kirloskar Ferrous can be bought around current levels of 280 with stock below 260 for potential target somewhere around 320 to 325.
Right, Ruchit. Trust Ekta in you to bring some medicinal realism into Sonia and my pizza and Maggi conversation itself. But, you spoke about mid-caps. Just a quick one on a couple of these large caps. They're doing well. Reliance has woken up after a while. HDFC Bank is doing extremely well, and HDFC Limited. So do you have any picks among these three biggies?
Frankly, I think all three mid-cap stocks are showing some pullback move, but this doesn't seem to be a end of a corrective phase. And primarily, even if you look at the markets or the index front, I think just because the bond yields have corrected yesterday and the US markets have shown some pullback move from the previous swing low supports, that's why we are witnessing an up move in Nifty as well. But we are not done with the volatility yet. So I think the large cap stocks, the upside should be limited from here on. And until Nifty surpasses that 17,500 mark, I think this should be just as taken as a pullback. So we are not recommending any significant moves from current levels in these large cap names. But I think more of a stock specific idea where Reliance Industries could see an extension of this pullback. But again, until market surpasses that 17,500 mark, I think one should stay with cautious and avoid aggressive trades on these heavyweights.
Okay, just want to point out that for Suven Pharma, in fact, it was a successful inspection which has taken place by the US FDA, and now they have 3 applications from that particular site which have been approved, because in July the company did not receive any observations when the US FDA did inspect the facility. So yes, it's a go-ahead for Suven Pharma's Hyderabad plant. But thanks, Richard, for that. We're going to leave you on that note. Before we take a break, here's some great news for investors. You can track the US market action real time on Money Control. Log on to Money Control website or the app and stay informed about all that matters in the global markets. We'll take a break and be back in a jiffy. Stay tuned. Welcome back. Well, a complete outperformance for the Bank Nifty, up around 1,000 points plus at this point in time, and the Nifty sitting pretty at 17,250 odd. But time now to focus on our special segment this afternoon, Inside Edge. Sonia today is focusing on M&M and Escorts Kubota. Both the corporates, while interacting with us, told us today that they have raised the industry guidance post strong sales in the month of September. Sonia, tell us more. You were talking to the managements. What were the key takeaways?
So, the big story is this, right? Tractor makers, because of very strong sales in September, have gone ahead and raised their full-year growth guidance for the industry. M&M has raised the tractor growth guidance from 3 to 5% earlier to 5% plus now, while Escorts has raised the guidance. They said that the industry will grow 5 to 7% year on year in FY23. Now, the growth rates have been picking up over the last many months. M&M has reported its highest ever tractor sales in the month of September, and they said that the tractor segment market share has picked up and will stay steady at about 40% plus. But just take a look at the growth rates for both M&M and Escorts over the last 4 months. Now, in June and July, M&M saw a degrowth of 13 and 14% respectively. It improved to a growth of 1% and then 20% in September. Similar is the case for Escorts. In June and July, a degrowth over there, and then 7.5% in August, followed by almost 39% in September. So what are the reasons for an improvement in tractor demand? One, of course, is the onset of the early festive season, so the year-on-year numbers look pretty good. Next, you have the above normal monsoon, which has led to an improved reservoir level and hence improved crop production. The crop prices are also holding quite firm, and that has led to more demand, and the Kharif crop harvesting will start soon. Hence the order book is looking pretty good for many of these companies. But let's not forget that M&M has been one of the strongest stocks. It's rallied 50% this year already, while Escorts Kubota as well has seen about an 11% rally. But yes, raising the tractor industry guidance is the big story. In fact, let's listen into the key takeaways that we had from our conversations with both M&M and Escorts.
In the latest estimates on growth released by TMA, which is Tractors and Mechanization Association, we have come up with a 5% plus growth number there. So I think that 3 to 5 band is now 5% plus in that sense. I think all that phantom demand has been serviced well by us and other players in the industry. How I would see it is that interest rate and upcycle is always a dampener for any industry that you would say, especially the industry like auto and tractors, which are like heavily financed. I think there are some more price increases that the industry will have to take in the remainder of this year. So a combination of price increases and commodity softening will bring our margins up. We continue to be the most profitable tractor company, and we intend to keep doing that on a regular basis. We will maintain a market share upwards of 40%. And in fact, as I said, we will gain some market share over last year. So I would say that our guidance would be in the similar pattern.
The first 6 months of this fiscal, the industry has already grown more than 10% now. So even if you assume a flat industry in the balance of the year, you will still grow more than 5%. So obviously the guidance, I think what the players are giving, I think is right. So we have been saying it will be mid-single digit growth, so it can be anywhere between 5 to 7% now. The late monsoon obviously has caught up, and the overall the rainfall still is above normal. So we expect the coming season will obviously be good for those sectors. So even though retail may be low in the current period, but there are certain sections which are doing extremely well on retail side. So the Central Indian belt like MP or Rajasthan or Gujarat are doing extremely well on the retail side. So overall, yes, when the festive season gets preponed, there is some pressure because the money is still not in the hands of the farmer. So some delay happens. So I think by the time the market picks up, October will be a big month for retail.
All right, so that was a valuable insight edge coming in on the escorts as well as the M&M story, the tractor story, so to say. But it's the consumption story which is taking your breath away. We did speak about a couple of stocks. Now, just keep an eye out on Trent. Trent, of course, is the company that runs Westside and Zudio and also has a joint venture with Inditex, which, of course, runs the Zara stores in the country. And there we have seen a big spike right now in just the last few minutes or so. In fact, all through the day it was doing well, and now it's moved to the high point of trade. Maybe the street believes that a lot more people will buy a lot more clothes this festive season. With that, we take time for our standout brokerage report of the day. Goldman Sachs has actually upgraded Interglobe Aviation to buy from neutral. Nimesh joins in with more details. Nimesh.
Hi Sonia, so today's standout is an Interglobe Aviation, a big upgrade from Goldman Sachs. They've upgraded the stock to a buy now with a target price of 22.10. Now, a couple of reasons they've upgraded the stock. One, Indigo's market share has gone up from 48% in Feb 20 to almost 57% as of now, and that is likely to sustain, given that there is a liquidity challenge for the smaller incumbent players. So that's the first reason. Second, Goldman Sachs believes that industry is going to see a consolidation between two players, that is Indigo and Tata Group, and that will drive a lot of pricing discipline. Third, Indigo's cost leadership is going to ensure that there's going to be profitability going forward, and these are the key reasons why they've upgraded the stock. As far as the near-term catalyst, quarter 2 is going to be weak, but there is a setup for a strong quarter 3 given the fact that the crude prices have fallen sharply. Even in terms of, despite the strong growth potential, the stock is sitting at just close to 9 times FY24 and 8 times FY25 EV to EBITDA, and hence a big upgrade on Indigo. Personally, the biggest risk or the biggest overhang on the stock will be the Ganwal stake sale. Remember, they sold just 3%, and now there is a 5-month lockup. But after that, there's going to be supply overhang. So that's going to be a key concern. But broadly, Goldman Sachs' key reasons is on back of earnings and on back of leadership, they've upgraded the stock to a buy now with a target price of 22.10.
Okay, thanks a lot for that. Well, with the way travel is picking up, no surprises there about that upgrade. But Angel One is gaining in trade today on the back of a very strong Q2 business update. Surabhi is standing by with more details. Surabhi, over to you.
Angel One, that is gaining momentum in today's trading session, and that is mainly because of a strong business update for the month of September. Their gross client acquisitions saw a marginal decline and is at 3.9 lakhs versus 4.5 lakhs in the month of August. Their total client base, however, grew by 3.4% on a month-on-month basis and now is at 1.16 crores. Their average daily turnover saw a growth of 11%, and the number of orders were up nearly 25% at 9 crores. For the F&O segment, their market share remained constant, but commodity segment, that's where they gained market share of nearly 170 basis points and is now at 53%.
Okay, Angel One buzzing today. Thanks, Surabhi, for that. But Electronic Smart India IPO has also opened for subscription. The company will be issuing fresh shares to raise around 500 crores. Manglam, you're tracking this. Tell us more.
Yes, I am, because it's a retail company for all the electronic stores, etc. It's an IPO that opens today up until the 7th of October. 56 to 59 rupees is the price band. Like you said, raising 500 crores is a fresh issue, and they're seeking a post-issue market cap of around 2,300 crores at the higher end of the issue price. What does the company do? It's the 4th largest consumer durable and electronics retailer in India. The top 3 include Reliance Retail, Croma, as well as Vijay Sales. It's got 112 stores across 36 cities, but it's got a leadership position in South India because 104 of their 112 stores are concentrated in Andhra Pradesh as well as Telangana. Almost 90 of their stores are under the name of Bajaj Electronics, and 11 stores of the company are owned. 93 are under the long-term lease model. What is the biggest opportunity? Like for any retailer, the biggest opportunity is for them to go ahead and open more stores and in more geographies outside of the South India. And what is the biggest risk? Like any retailer, competition from larger offline players, the kinds of Reliance and the others that I just spoke about. And secondly, all the online giants, because a lot of electronics, the small electronics in particular, are now being bought online itself. They will use 111 crores for capex, 220 crores for incremental working capital, and 55 crore for debt repayment. How do the numbers stack up? In FY22, they did revenues of almost 4,350 crores with about 7% margins, and the net profit was close to around 104 crores. In the first quarter of this year itself, they've done around 1,400 crores in revenues and 7% in margins with 40 crore as net profit. The only thing attractive about this IPO is the valuation. It's offered at 22 times trailing price to earnings. Its closest listed peer is Aditya Vision, which is about the 5th or 6th player in the country, which trades at around 47 times. And, even if you take away the electronics part of it, all other retailers trade at much higher valuations. So valuations are attractive, but there is a fair amount of risk in a business like this.
Okay, thanks a lot for that. Explain the new IPO that opens today. Let's slip into a quick break. On the other side, more on markets and stock-specific action. Do stay tuned in.
Welcome back. Let's focus on the insurance sector. That's preparing itself for what could be the biggest reform in the days to come. The insurance regulator is set to operationalize the Bima Sugam. What exactly does it mean, and how will it impact the insurance sector? Yash joins in to tell us more.
The two-letter word Bima Sugam could actually prove to be the biggest reform in the insurance sector in the days to come. The insurance regulator has asked insurance companies to operationalize Bima Sugam by January 2023. But what is Bima Sugam? Think of it as an Amazon-like platform where all life and general insurance policies will be listed. Bima Sugam will be responsible for sale, servicing and claims coming from these insurance policies. Who can buy insurance policies from Bima Sugam? Aggregators like Policy Bazaar, brokers, banks, insurance agents act as facilitators or bridge in terms of selling insurance policies through Bima Sugam to individuals. What's the best part? You as an individual can also buy your life, motor or health insurance policy through Bima Sugam. Now, who gets the funds to start Bima Sugam and who owns this platform? Bima Sugam will need approximately 85 crore rupees as initial capital. Insurance companies are expected to be major shareholders of this insurance platform. So initially, some general insurance companies will hold about 30% stake in Bima Sugam and another 30% will be held by some life insurance companies. A list of some of these general and life insurance companies you'd be able to see on your screen. Now, as more funds are required for the operations of Bima Sugam, more insurance companies will be roped in as investors. Now, the most important part, what's in it for you, me, and many other policyholders? Bima Sugam is expected to significantly reduce commission paid by insurance companies. How? Let's look at life insurance sector. Life insurance companies pay around 21 to 45% commission on the sale of their policies depending on the policy term. Assuming that an individual buys a 10-year insurance saving policy, if the premium charged on this policy is about 100 rupees, then the commission included in this 100 rupees would be around 30 rupees, which would be paid by the life insurance company to the insurance agent, aggregator or the broker. This would leave the life insurance company with just 70 rupees to invest and give returns to the policyholder as his policy matures. Now, the commission on Bima Sugam could come down to just about 5% as compared to the earlier 30%, leaving the insurance company with much larger sum to invest on behalf of the policyholder. On a term insurance policy, with the same calculation, straight discount could be given on the premium to the same policyholder. Now, let's look at the general insurance space. If on a motor or a health insurance policy, a general insurance company pays a total commission of 19%, Bima Sugam could bring down that commission to just about 5%. What could that look like? If the motor or the health insurance policy through an agent, broker or an aggregator comes to a premium of about 100 rupees, then the same policy through Bima Sugam would actually come to you at a premium of just about 85 rupees.
All right, Yash, thanks a lot for that. Let's slip into a quick break. On the other side, our commodity segment, Manisha Gupta will be joining in with Peter Maguire, the CEO at Exim Australia. Stay tuned.
Welcome back to Halftime Report. Joining us on the show now is Peter McGuire. Peter, hi. And 24 hours to go for the OPEC and allies meeting. And I don't think we've waited so long for a meeting in last many months because we've almost known on what would really happen. But this time around, the kind of short covering and the $8 jump that we've seen in crude prices in conversation about this meeting, is it going to be buy the rumors, sell the fact, or do you think OPEC and allies would actually come out and cut that much?
Well, that's the debate, Manisha, and we're sitting here. We had such a big build on yesterday morning. The markets went wild, and maybe that's going to be a continuance over the next couple of days. So I'm thinking, yes, I'll put my hand out there. Will they do close to 1 million? I won't be surprised, and I think that's what most analysts are anticipating.
So, let's put it as a case study then, Peter. If 500,000 barrels of an output cut is what OPEC does, how do you see the prices reacting to that? Or do you think 1 million barrels, because it is factored in, you could actually be looking at some profit taking? How are you reading the numbers here?
I think 500,000, Manisha, would be underwhelming, and I feel as though that the price will probably, I'm not saying tank, but I think they'll give up some of those gains by a couple of bucks. If they do the million, and that really sets a line in the sand, I wouldn't be surprised to put maybe another $1 or $2 on in the short term. So it's pretty wild to say how far it'll go because I'm worried about US dollar as well in that over the next matter of a week or so.
And how sustainable do you think this rally is? I mean, as you're saying, a couple of dollars more perhaps. So we're not even looking at $95 per barrel in the very near term. So how do you look at the new range and how sustainable is this rally?
Well, first off, I think the range is going to be that, low 80s to maybe you might see an 88, 89 a 91, 92 for Brent. It's currently at 89.33, so it'll go up a couple of bucks. But that's as far as a range. Maybe you might go a little bit higher, but I just think that there's enough issues out there as far as that inflation story really creating much concern on Main Street, and that really is the temper of the market at the moment.
Peter, as you said, the demand is a major concern here, but we did see a lot of sell-off because of macro as well, the dollar index being the major reason here. So if the dollar continues to decline, how would you look at the demand on the other side?
Well, if the dollar comes off, Manisha, if it came off back to 105, then I think that there would be certainly a push up as far as price. Demand, that softer US dollar would be a good sign for many of those other currencies, be it pound, euro and yen to start with. So that's going to be a plus. But does that happen? Because I still think that Jay Powell's got a couple of tricks up his sleeve, and I won't be surprised to see another 75 basis points or another 2 from the Fed over the next couple of months.
Also, how are you looking at the European Union's impending ban on 5th of December? Has the market factored that all of that in?
Well, it has to a certain point, but that's still it's a little bit further out, and I think that there's enough concern on many other issues that impacting market. You've got the North Korea situation, you've got what's happening with naturally Ukraine and Russia. So there's so many moving parts to this whole equation that needs to be discussed and really, worked through until we get to even that point with Europe.
So, as you said, early 80s and early 90s is where we could be looking at the crude oil prices. Does that improve demand going forward? Are we looking at that at all in this quarter now? Because we do understand that we're working with a deficit of around 0.6 million tons in the global markets right now. OPEC output is nearly 2.9 million short of what they have agreed to. They're looking to cut some more. How are you matching all of these puzzles?
Well, when you've got to try and work it through, yes, I feel as though that there will be concern there from a demand destruction standpoint if we roll into winter and we get prices up higher from here and that inflation story doesn't, abate. So if we've got 11 or 12% or 13% inflation into Eurozone and UK by Christmas, then that really is going to impact Main Street.
20% of decline in the previous quarter. How do you see this quarter ending?
That's 3 months out. We've got a midterm election. That's a hard question, Manisha. I think it's going to be around this sort of level unless we see something dramatic happen, an unknown or a surprise to enter the market. We've just lived through Hurricane Ian, it decimated Florida. If we get a couple more bad storms, that's going to impact US. Then you're looking at what happens as far as other geopolitical concerns globally. So, I'll go out there and say, first off, I want to know where the US dollar is, and we don't know. And the second part is it could be up or down another $10 from where we are currently.
All right, Peter, Manisha, thank you so much.
That's how he started.
On that note, what we'll do is we'll take a break on this edition of Halftime Report with, the markets are looking good.